Even as frontline indices see little change, mid-caps continue to come under selling pressure. Industrials and power are the big losers, while financials eke out some gains. Ultratech takes a detour from its cemented growth path to invest 1,800 crore rupees in cables and wires facility in Gujarat. The move aimed to fortify its construction business raises capital allocation concerns. The stock slips. Stocks of cables and wires makers take a drubbing on the news of Ultratech's entry, but KEI Industries and RR Kabel are sanguine. They are seeing no near-term impact due to the gestation and ramp-up period required, with the industry on a strong growth path. RBI has rolled back its earlier increase in risk weights for NBFCs and micro lenders in relief to such borrowers. The step is seen as one among many by central bank to ease the norms. Stocks of lenders rally. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch from live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much for tuning in, as always, this afternoon. A quick look at what the market is doing today. A very muted day of trade that we're seeing coming in for the markets. Look at the Nifty. Open up in the green, then saw in the red, and now it's been at that level, 22,500. So in that range of 22,500 to 22,600 is where the Nifty was. Opened up there, but then yes, off the day's lowest, at the day's lowest point. And obviously, do not forget, we are seeing in terms of a bit of volatility coming in because of the expiry as well. Other than that, let's look at the banking side, because that's managing to hold on to some bit of a green. So Nifty Bank, that's managing to hold on to 0.5% of gains, while almost that's where it started the day. It's managing to hold on to 48,800 levels, 0.5% of gain. Mid and small cap, like you saw on the screen as well, was actually underperforming today. Mid cap down 1.3%, small cap is down 1.8% in trade. So underperformance is coming in from the broader markets today. Financials is the only one which is managing to hold on to gains, right? So like we saw Nifty Bank, that's managing to hold on to gains. But yes, in terms of the moves that are coming in, Ultratech Cement, M&M, Kotak Mahindra Bank and ITC among the losers. Banking side, financial names obviously managing to hold on to some bit of a gain. Real estate names also are something that has been a bit under pressure in today's trading session. Nifty Realty is down almost 2%. So that's where we're seeing among the top losers is Realty as well as the Auto Pack. But yes, that's how the market setup is looking like. Not much of an excitement there. Bit near the day's lowest point right now is what the market is trading at. Let's watch out for the second half of the trading session. Will be interesting to see where we move in during the next half of the day. Ultratech Cement, let's talk about that, because that's slipping in day today after the company has taken a detour from its cemented growth path to invest 1,800 crore rupees in the cables and wires facility in Gujarat. And this move is aimed to fortify the construction business of the company. Cable and wires companies are falling today. Upasana is here to give us more details on this one. Upasana?
Well, certainly, cables and wires segment is seeing pressure today on the back of higher competitive pressure with the entry of Ultratech. Now, Ultratech plans to enter the cable and wire segment with an investment of 1,800 crore over 2 years. The company aims to meet the growing demand of wires and cables across various sectors. And wires and cable industry, there has been a positive industry tailwind as the sector has witnessed a CAGR of around 13% from FY19 to FY24. Now, the street is fearing the intensification of competition for the existing large players. Now, if we look at the FY24 market share of the top players, Polycab stands at 26%, KEI at 12%, followed by Havells, which stands around 11%. Now, HSBC believes that the entry of Ultratech is likely to have a material impact on growth and margins after the commissioning of its plan for the major players, that is beyond FY27. It has lowered the target price of the major players between 7 to 23%. It has given a buy rating on Havells with the target price cut by 7% to 1,730. Polycab, it has given a buy rating but has cut the target price by 20% to 6,250. On KEI, it has given a hold rating and target price cut by 23% to 3,450. And lastly, on RR Kabil, it has given a buy rating and cut the target price to 1,260 per share. Now, Jefferies believes that it foresees a lower competition impact on Polycab as compared to other housing players like Finolex Cables and Havels, and Polycab remains the preferred pick for the brokerage. Now, Morgan Stanley says this move is certainly a big surprise, but it is not concerned about the growth outlook for these companies going forward. So all in all, cables and wires segment remains in focus today, seeing pressure on the back of competitive intensity.
Okay, Upasana, thank you so much for that. That's why we're seeing some bit of a pressure, like Upasana detailed out the reasons as well. But in fact, we spoke to Anil Gupta, who's the Chairman and Managing Director at KEI Industries, as well as Rajesh Jain, CFO at RR Kabel, to understand the impact of UltraTech's foray. Listen into what they had to say.
This and the market space is big enough to give space to another player. Number one. Number two, UltraTech will take minimum 3 years to start their production. Whatever somebody may say on paper, 2 years, but we have our long experience in developing the industries. Number three, it will take minimum another 3 to 4 years to or 5 years to develop the brand for wires. They may not be able to disrupt the market by just slashing the prices, because it is in this space it is very difficult to increase the prices once you slash them. There will be no problem in margin expansions because this comes by economies of scale. And I have said that we have no fear in our growth plan of 20% plus for next 5 years, doubling our turnover to 25,000 crore. And we are rapidly growing in the export markets. I see that in next 2 years, 20% of our sales will be coming from export markets. There is no question of any rethinking of capex. In this year, we are doing a capex of close to 800 crore, or next year the capex will be 1,000 crore, which is ongoing at our new plant coming up at Sanand. And in the next financial year also, we will be doing a capex of close to 800 crore. We will not be reviewing or reducing our capex plan, and I mean our growth trajectory will remain the same.
This is very big industry, and like almost 85-90,000 the industry size was last year, and it is further grown by almost 13 to 15%. And this is such a fragmented industry, and there are not many even unorganized player also. So if a big player comes like this is always a nice move where more strong player will be like get bigger margin of market share. And though it is very like quick reactions from market, and it is very like on negative side market is concerning. But what I see, this is like for players like us, it is good time that we can also have our growth plan intact, and we see good consolidation in market. But it is not that much like disruptive what market is reacting as per me. So first, when we see from like margin point of view, first you need to see that it will take at least like 2 to 3 years to come into production, and again getting a sizable size of production and getting established in market. It may be another journey of 2 to 3 years. So it is altogether like 4 to 5 years minimum to take sizable size, even in this overall industry, which will be like around 1.5 lakhs by FY 28 or 29.
Okay, on that note, we're going to step into a very short break, viewers. Don't go anywhere because we'll bring you more news and updates on the other side.